Morning, Tony Virtue speaking, Virtue and Partners, and Happy New Year to you all. I hope you managed to get a good break and enjoy some of this beautiful weather. Busy time in the business as it happened. Markets were very volatile towards the end of last year, particularly in America. The markets went down substantially. The good news is they came back up again. Probably the main reason for that was the US Reserve determining to lift interest rates and buy bonds at the same time. So it's a bit like going down the gym, speeding up the treadmill and going up the elevator a bit quicker, and not recommended. The practical effect of that was that markets fell significantly. President got involved, as you'd expect, and so they had to then go back into the market and say, look, they didn't quite mean what they said. They will be slowing down increases, if any, going into this financial year. Markets like that, not unsurprisingly, and on 3 nights the Dow rose 1,000 points in intra-fund trading, or 5% in a particular night. So the key to this obviously is you don't want to be in and out of these things. It's just something where a lot of this is automated trading, and that's where people get hurt. I can say here everyone's been very calm, not too many phone calls, so late nights for me, but no one's lost money, which is the main thing there. Turning to Australia, important time to look at the end of the year how markets have performed. The graph you see there shows 120 years of the Australian stock market. 80% of the time it's gone up, 20% of the time it's gone down, which is quite logical. A running dividend of 5%. Now this is crucial. Now when you compare that to the 10-year government bond rate in Australia of about 2.7%, which is effectively our risk-free rate, you're getting twice the returns from those dividends. And the question is, are you able to deal with the volatility of that? And that's obviously our stock in trade, to work with clients and get the allocation right. And probably more importantly, get the psychology right, so we're not making changes in a rush or under pressure. The last thing you want to be doing is making rapid changes when markets are moving around. The time to do that is when it's quiet, and have a good margin of safety so you're not pressurized into doing that. Some of you have been following that train wreck over in Britain at the moment called Brexit, which rolls on and on. So look, that can't be good for Britain, can't be good for Europe, and that's reflected in their own markets. Eventually after the jawboning, something will be sorted out, but again, it's just very sad to watch from here. We have very little money in Europe at the moment, and Britain for that matter. Looking to the future, China has put quite a few stimulus policies in. They had a bad year last year. Their stock market was down 25%, and they'll be doing all they can to get that up and running. Obviously, these negotiations with Trump kind of rumble on the premise that it will hurt China more than it will hurt the US. Well, I think it's probably reached a point now where they'll agree to disagree and find some middle ground. That'll be positive for the markets. Domestically here, we have a federal election around the corner in May, so people are going to be naturally cautious up to that time. Our own property market is subdued at the moment, and similar to equities, it's not uncommon to see a 10% movement in assets just based on sentiment, based on confidence, based on false selling. So there are some people called a bit short on buying off the plan, and that of course creates a bit of a run. APRA have now eliminated the limits they put on the major banks, so they put a bit of a speed limit on there, so they could only increase their book by 10%, only have 30% of their loans as interest only. That's all gone, and one thing I know about economies is that governments will do all they need to do to get them firing again. It's a bit of a put option, and that includes making property attractive. If you can see through what's going on out there at the moment and understand that it's in everyone's interest to get those property prices going up again, but a sensible period of just stability for a couple of years has been common in Australia, and probably helpful. It is certainly helping people who couldn't get into the market get into the market, but as usual there's a bit of it's like this whipsaw effect, and we just need to find some sensible middle ground to stabilise that. So busy year ahead, and I look forward to seeing you all as the year progresses. Happy New Year to you from Tony Virtue, where experience pays. Thank you.